Hello there. Welcome to the Little Great Investor. In this video, we're going to cover the key terms and concepts you need to know if you're just starting to invest. Whether you're looking to save for retirement, make money, or simply want to learn more about investing, this video is for you. Let's get started. 1. What is investment? First, let's define what we understand by investment. Investment is the act of putting your money into assets with the goal of growing your wealth over time. There are many different types of assets you can invest in, including stocks, bonds, real estate, and more. 2. Risk and return. One of the key concepts in investing is risk and return. This refers to the relationship between the amount of risk an investment carries and the potential return it can generate. It's important to understand that investments with higher risk have a higher potential return, while investments with lower risk tend to have a lower potential return. 3. Asset allocation. Asset allocation is the process of dividing your investments between different classes of assets, such as stocks, bonds, and cash. Asset allocation is an important part of the investment process as it can help balance risk and return and increase the overall efficiency of your portfolio. 4. Diversification. Diversification is another key concept in investing. This refers to the practice of spreading your investments across a variety of different classes of assets to reduce the overall risk of your portfolio. By diversifying your investments, you can help protect yourself against potential losses in any area. 5. Financial advisors. A financial advisor is a professional who can help you make informed decisions about your investments. They can provide guidance on topics such as asset allocation, risk management, and long-term financial planning. It's important to choose a financial advisor you trust and who takes your best interests into account. 6. Investment fees. It's important to keep in mind the fees associated with your investments, as they can decrease your returns over time. Some common types of investment fees include management fees, sales charges, and transaction fees. It's a good idea to understand what fees you're paying and how they can affect your overall returns. 7. Investment horizon. Your investment horizon is the period of time you have to invest. It's important to take your investment horizon into account when making decisions about your investments, as different investments may be more or less appropriate depending on how long you have to reach your goals. A short-term investment horizon may require different investment choices than a long-term horizon. 8. Market trends. It is important to be aware of market trends and understand how they can affect your investments. Market trends refer to the direction in which the stock market or other financial markets are moving in a period of time. Understanding market trends can help you make informed decisions about when to buy and sell investments, as well as how to diversify your portfolio. It is important to remember that market trends can change quickly, and you should always be prepared for market fluctuations. 9. Inflation. Inflation is the increase in the general level of prices of goods and services in an economy over a period of time. It is important to consider the impact of inflation on your investments, as it can erode the purchasing power of your money over time. Some investments, such as stocks and real estate, have the potential to generate returns that exceed inflation, while others, such as cash and bonds, may not. 10. Market index. A market index is a statistical measure of the performance of a group of stocks or other securities. The most well-known market index is the S&P 500, which tracks the performance of 500 large-cap stocks in the United States. Market indices can be used as a reference for your investments and can help you evaluate the overall performance of the stock market. Conclusions. We hope this video has provided you with a solid foundation in the basic concepts and vocabulary of investing. Remember, investing involves risk and there is no guarantee of returns. It is important to do your own research, seek the advice of a financial professional, and be prepared for market fluctuations. Happy investing! Thank you for watching the video, and I hope you found it useful. If you did, we would appreciate a like and a subscription so you can stay informed of upcoming videos. And finally, if you have any questions or want to learn more about investing, don't hesitate to leave a comment below. Greetings!